The US payrolls data was much better than expected, and again has led to market thinking about when the Federal Reserve will start tapering, sooner rather than later, and the fact that interest rates could rise in 2022. Bond yields have risen from 1.15% to 1.3% over the past week. So obviously the market's now fearing that the kind of monetary easing that we've seen or been used to for many, many years is slowly coming to an end. That said, we think that the finance ministers meeting at Jackson Hole would be a pivotal event and could give some good direction in terms of where we think interest rates are going forward. Now, all of that said, there are kind of growth expectations being lowered globally, and we've seen that in China recently, where forecasts for GDP growth have been brought down from over 6% towards 5%. And recent data from China in terms of exports and imports was much lower than expected. So this is having an impact on global growth going forward. I think the other factor is the new Delta variant of COVID, which again is raging across both the US and Europe, but more particularly again in Asia, where the number of cases in places like Indonesia, Malaysia, and even China, where we've seen extended lockdowns starting to happen again. It is all impacting the kind of growth prospects, particularly for Asia. So we do feel that there are kind of problems that the market's kind of ignoring at the moment in terms of the COVID variant, which could delay the back to office, back to schools, particularly in Europe and the US. So these are the factors that we want to watch out for. I suppose the other big news that came out was obviously China's regulations on the tech industry, which has reverberated across the world. Maybe it's a move towards more social equality, mainly labor rather than purely equality across people. But anyway, it's the first country to make a move. Everyone's been talking about the social divide. So we'll have to see what China's policies and come out over the next few months to give us again some direction. But all of this led to emerging market outflows because China has a big weightage in the indices for emerging markets, and India also faced quite a lot of outflows in July as well. So the good news, I suppose, would be that whilst China's cracking down on the tech companies, and obviously that's causing a lot of pain for investors, India's indices is starting to see quite a number of new tech companies being listed, Zomato being the more recent one. And if you looked at the anchor book there, it had the who's who of institutional clients, who brought into the company, and the premium on the first day of listing was hugely significant compared to the listing price. I think this will continue to enthuse investors to look at India as being the new tech home for investment, and that could bode well for the markets going forward. But I think in the short term, our views still remain that global growth worries will come to the fore over the next few months, and this could have some form of market correction going forward.